Hey everyone, welcome to the trading floor's 25 days of Tradesmas. Make sure you stick around to the end of this video to find out how you can win $1,000.
Okay, so moving past the second video now, where we got this nice price action trade entry on November 12th. Unfortunately, using the same logic as the two previous videos, we don't really get a trade opportunity here, because by the time we get a break of the Tokyo high, it's already gone. We don't get any moving average retest, and we don't even get any price action to really go off of. Technically, you get a break here and you can go from there, but not really interested, especially when the moving averages are starting to balloon even before I'm looking to trade anyway. This would have been kind of the first candle I would look to trade at, and by the time it's already so far past the moving averages in the Tokyo high, so not really interested in the 13th. Coming the 14th, we do get a break above here. We get our breakdown early in New York, but it never fully recovers for us to get a buy opportunity. Now, you could have looked for a sell opportunity. For those who like imbalances or fair value gaps, I had marked both of these up. These were the two main ones that I wanted to see price come back into in order to be able to get a sell down, but price never came back and retested that. It came close a couple times, but not quite there. So just didn't get a trade opportunity here to sell, unfortunately. Also, you wouldn't have been able to if you want to stick to the objective rules of the 21 to 55, meaning to be below all three major moving averages. Anyway, the 21 does, but the 55 stayed stuck between the 610 and the 377. Now, this is where I freestyled a little bit. As you can see, I took two buys here below the moving averages, and I'll explain those. So the first trade was, I wouldn't say a mistake, but it was a little early. I assumed that this was close enough for a rejection on the top side of the Tokyo high support. So going through everything, we get the break above Tokyo high, price crashes back down into the moving averages, and then it comes pretty close to the Tokyo high as support. It crashes hard with these red sell pressure candles, and then bounces extremely hard with these green candles. Unfortunately, hindsight's 2020, this was the trap of the century. So I take this trade, I lose it. Simple as that. Now, with that being said, these next two entries are easily able to explain if I just take this off and just going off of our logic without the moving averages. So this is more of using the Tokyo session, our logic of Bitcoin crashing early New York, and then from there it retracing into the Tokyo session, maybe hitting the Tokyo low, maybe hitting a moving average down here, but as we know, the moving averages are up here, so we don't really care about the moving averages as of now. Bitcoin gapped on the 5-minute, which doesn't really happen all that much on Coinbase. So I knew there was a lot of buy pressure that came here. It did fill it a little bit, but after I took this trade, I was like, price needs to come back down and fill the rest of this gap. And then I looked in the Tokyo session. I was trying to find any gaps there. Everything was filled. Up to this point, right when we started to make that move, it was a heavy green buy pressure candle that left an imbalance. And what do you know? The last hard red sell candle, so heavy sell pressure, came in right on the dot and stopped and reversed right here. I was going to take this trade off of this candle, but I wanted to see kind of more confirmation, maybe another wick rejection, which we obviously get at this candle here, just to give me more confirmation bias that like this is what price wanted to get to, and it's going to be bouncing off this area. So I took one trade here. Now, the original thesis of this was I wanted to see this entire candle cleared, and then I wanted to see it reject the top side of this for a potential second trade, because I was pretty confident now that price literally came crashing down all the way to this exact point that we're going to continue to go up and possibly fill this point here, this order block or supply or heavy point of resistance, whatever you want to call it. Because as you could see, technically it's probably not supply. SMC people will hate me for this because price did come and fill that, as you can see here. But this was a heavy resistance that I wanted to see price come back to, which it obviously does. And it worked out a really good example. So I will say that the strategy that I'm using, the foundation and the core is pretty simple, right? We're using Bitcoin on the 5-minute. we're trading around this 9 to 11 a.m. time, UTC -6. We're waiting to see price break above this Tokyo high if we're looking for buys, vice versa if we're looking for sells. We want to see price crash back into this session around, it doesn't really matter, late London, early New York, enough around the time where we're looking to place trades, obviously. From there, what is price doing? Is it rejecting off of the major moving averages? If so, amazing. And then if it bounces off and covers everything, you take a trade objective as possible. If you want to dive into the weeds a little bit and add a little bit of price action, look to see in the Tokyo session or before, when it made that first initial leg up to break this, did it leave any crumbs for it to possibly need to cover, like this gap? And more importantly, this was the lowest of the crumbs, I guess you could say, that was left, needed to be filled. And so price came exactly at that point and rejects completely off of it, giving me full confidence that this trade will work. And as you could see in my broker, these were November 4th. This was the previous video, November 12th. And then this was the first trade that I lost. As you could see, this trade right here. And these were the last two trades I took on this day to win, because I wanted to come back and target this area because it seemed like price wanted to go back up into that zone. So it's a simple strategy. I complicated a little bit on this day, on November 15th, but even still, like taking off these two trades, you would have still got a buy opportunity here. I was just feeling very confident that I had found this imbalance after I noticed this loss and all these gaps, that once price fell down and literally stopped and reversed on this exact point, I was fully confident to take more buys because it was just going to reverse there. But if we're sticking to the exact objective trade setups that I've gone over in the previous videos, you do end up getting a trade opportunity right here, because you could see the 21 and the 55 creep above the higher time frame. The 21 to 55 creep above the major moving averages here. I would put my stop loss at this point. It was the kind of first full body candle of this move, and there's not really any imbalances that you need to worry about being filled. If you come all the way down here, I think that's a little too exaggerated. You could argue here this wouldn't be a bad idea, but ideally, personally for me, I would have put it around here, and then I would have targeted that too. And so instead of getting the two trades that I did, you would have lost 1 and 1, so you've still been up 1R for the day. So either way, if you take more of a price action approach, you would have possibly got more reward if you wanted to hold it longer. Or if you still took this objective approach that I keep hammering through, you would have still made 1R on the day. So I'll catch you on the next one. Peace.
Thanks for sticking around to the end. To be eligible for the free $1,000 giveaway, you just have to be able to receive a PayPal payment. To enter, like and comment below and come back tomorrow for another video and another chance to enter.